Recording is on.
Hi, Leo. This is Blanca from Blanca Professional Service. And as you guessed, we have our guest speaker, Leo Jordan from House America Financial today with us. And he'll be talking to us about home buying and how to buy a house as a first time home buyer using down payment assistance money and also some grants. And he'll explain us
Right.
everything about how to do it. And I want to welcome you, Leo, and I want to ask you if you can share with our public or audience how long you've been doing the lending in the lending industry business, and
Hmm.
how you are gonna be able to help them, and if they have questions, how they can reach you. So go ahead
Of
and
course.
tell us more about you.
Absolutely. So thank you, Blanca, for having me. It's a pleasure. Blanca and I connected over a dozen years ago at our alumni event at Cal State LA and kind of kept in touch since then. So glad to reconnect with you and discuss some opportunities today. A little bit about me. As I said, I was with Blanca at Cal State LA, where I got my MBA back in 2009. And more or less from right there, I've been in the finance side, different parts of the mortgage business. So, starting off initially in 2010 with Bank of America after they got a hold of all of the countrywide loans that were in default or imminent default back then. So, our initial, my first 5 years there was to work with borrowers, try to avoid going for them to go into foreclosure, and restructure their loans from modifications to any other options, forbearances and such, just to save the homeowners from losing their homes. Since then, I've been with a credit union as a lending manager, where we did all the type of loans from auto to personal to HELOCs to solar and etc. And then as of the last few years, I've been in the mortgage lending MLO, just doing direct lending of home mortgages. I was with PennyMac for a little while, and recently, as of end of last year in November, I joined House America Financial here in La Cañada, California, where now I have access to a wide range of products, not just your agency, Fannie Mae, Freddie Mac, FHA, VA loans, which those we have, and those we're a direct lender for those. But we also have more or less all of the non-QM products, the you're not non-usual, the qualified mortgages outside of your regular income earners that need special type of loans. We have everything that we can cater to that type of populations, as well as we've seen the market kind of shift, kind of how we touched base earlier, and I was mentioning where the first time home buyers are going to be, in my opinion. I even saw it in a article by the Rocket Mortgage CFO, also stating the same thing, that 2023 is going to be a driving force, may just be the first time home buyers. So we do have a few programs there that are assisting a lot of times. When it comes to home buying, your credit, income, and assets are the three main aspects that help people get to become a homeowner. And credit and income, even sometimes most renters have that option, except they don't have the amount saved up to be able to make that first purchase, from the down payments needed all the way to the closing costs that need to come out of pocket. Is usually that's the reason why some people are maybe even hesitant to look into purchases and such. So there's a lot of programs that are specifically geared towards these type of populations, and so would like the opportunity to kind of discuss those, and we can ultimately goal is to educate all the listeners, your clients and our clients, to understand how much help there is. Just has to be the individuals need to reach out to you, reach out to me, and we can obviously run the options for them. But we'll definitely cover as much as we can today, so that way they can have a better understanding of the programs.
Okay, that's awesome. So I wanted to tell the audience about what is considered a first-time home buyer in the lending industry, and also how they can qualify for down payment assistance, and what are the requirements. I know we're gonna like talk in general terms because I understand it's a case by case basis, and
Right.
the way it's gonna be decided as for the person's personal information and
Correct.
FICO scores. But if
Hmm.
you want to just be broad and just tell us
Right.
more in that sense. And then if I ask you a little favor, can you speak a little louder? So then, you know,
Louder?
okay,
Absolutely. Yeah.
thank you.
Definitely. Yeah. Is this better? You can hear me now?
Yeah, or maybe closer
A
to
little
your
bit louder.
microphone.
I have the headsets on. Let's
Oh,
see. I
okay,
think
okay.
it's working with the, yeah. I'll speak louder though, not a problem. So the question you asked, what does it mean as far as the first-time home buyer? Who's a first-time home buyer? And just by the name itself, most people are going to be under the impression that it's I've never owned a home in my life before, which is actually incorrect. The true qualification is really the past 3 years. If you have owned the property in the past 36 months, you're not a first-time home buyer. So even if you had a home for 20 years, it was your home, you had to relocate for work, you sold that property in 2019 and have been renting since 2019, you are by the definition a first-time home buyer because for the past 36 months, you have not been on a mortgage or a title. So there you are. You do
Okay.
qualify based on just the past 36 months. So it's not a lifetime. They don't look back all the way to your teens to see if you qualify or not.
Okay, and that's good that you mentioned that, because there is a lot of people that they say, "Oh, well, I have my house for so many years. I don't think I can
Right.
buy one." So that's a good clarification. So if they haven't purchased a home within the last 3 years, they are considered to be first time home buyers.
First time home buyer. And then, yeah, as a result of, you qualify for um, the different programs that there are out there. Now, with the down payment assistance programs, first time home buyer assistance programs, some lenders may even be hesitant to push that to their borrowers because it does require a few extra maneuvers, and they sometimes do take longer to close. So we've been very selective with which channels we work with to ensure a very proper and quick process all the way from initiation to closing, because we too don't want to start a process, promise someone that we can get that down payment assistant or whatever the case may be, and then 60 days later we are kind of still trying to make it happen. So the four options that we have are with our partners that are very subject matter experts, and we'll be able to get the process just like any other loan started and closed within the 30-day escrow time, maybe 35 days at most. We'll be able to get that process from A to Z completed.
That's good. Well, that's an interesting point that you mentioned there, because I know, I have on on my website, just for example, I have a link
Mm-hmm.
for people to go to my website and they can look under the tab real estate and then resources, and then I have down payment assistance as one of those resources, and they can actually click on the link, and what they do is they put on their address, like the address that they want to
Uh-huh.
buy the house. Yeah, if they saw a house and it's for sale, then they go ahead and put it in there, and then automatically the system throws then a list of lenders, or maybe organizations that either are county or are just private institutions, or somebody who's giving
Mm-hmm.
money for first time home buyers. So is
Right.
that how it works, your program too, or is a different kind of program?
So we'll start, because depending on each individual's needs, again, since we are a direct lender and broker, we have not just one product. So generally, we do like to take it by each scenario. So if, we have a borrower, I would like to personally talk to that individual to see what pros and cons, strengths or weaknesses that specific borrower and their scenario is. And based on that, then I can kind of gear them into, okay, this will be the better option for you. or this will be the better option. So, and it's not a very black and white, as you know. There's always areas where we're like, okay, this, you may qualify for two of the products, but based on your credit and the fact that, let's say, you don't have a down payment, but you do have closing costs, this product might be the better one for you. Or, for instance, some of the grant programs are very specific based on census tract information. So if the property you're looking for doesn't fall under that, then we're forced into looking into the other options to make sure that we do have a program for you. So
Okay.
each individual's credit and location even that they're looking for is going to determine what the best program will be. So it's always best, if they're thinking, and it's always best to start that process as early as possible. So if you have people who are looking to buy in the second half of the year, now is the time that they should get in contact with the lender and, of course, a realtor like yourself to kind of narrow down their options, and even on top of that, be able to correct let's say, if they have any red flags that need to be addressed, right? So if they have money that needs to be seasoned in a bank statement, you want to
Put
have
them
that
in
there
there.
for 2 months, for instance, right? Or if we pull credit and we see, we have programs that we can boost your credit with credit score, right? So let's say we pull your credit, one credit card has $1,100 balance left on it, and we'll run the analysis on it, and I'll say as long as you pay that down to $500 or less, your credit score will jump 20 points, and now you may have better options available, better rates, better programs. So you definitely don't want to wait till the day you're ready to purchase to start the process, at least the talks with your lender and your realtor. You want to do it a few months in advance of you kind of already being ready for it. So that way your financials can all be in line when you are ready to pull that plug.
That's a very good observation there, because many people wait until the very end, and it's a
Yeah,
process. So people have to
right,
understand that when you're buying a home, it takes time. It's a process. You have to gather your information, your taxes, your income, little things like that. But they don't seem to be too
right,
difficult. But sometimes people are not that really organized, so you have to start
correct.
digging,
Yeah,
in boxes or whatever. so so
absolutely.
that's a good observation right there. But now, can you, if people are interested in calling you, talking to you, what is the telephone number or website, or how do they contact you?
Yeah. So my best way to get a hold of me, I have a direct line at the office as well, but even that is forwarded to my cell phone number, which is always with me. So I'm not a 8 to 5, and don't call me after 5. You can call me, and I know with most people working throughout the day, maybe after 5 is when they only have time available to do work on their personal finances. So call me anytime. My direct phone number, cell phone number is area code 818-389-6666. Available at all times, as best as I can be. And if I'm not able to pick up, whatever the case may be, I'll make sure to return your call as early as possible, and we can discuss those options. You can email me. My email is Leo, my first name, Leo, last name, initial J, at houseamericahl.com. So House America and the HL for home loans.com. So if you want to start the conversation there, we have an online link where I can send you a secure link where you'll be able to do the application from there and put your own personal information, your employment information, and all other things. And you can even use that secure site to upload any documents from your tax returns to your pay stubs, etc. So that way we'll have a full picture. Once we especially pull credit, we'll have a full picture of your finances, and then we can sit down and discuss. And I'm also in a retail space here at La Cañada Flintridge. So if we have people who are more comfortable doing this face to face, the office, again, it's something I have keys for. So if someone needs to go to work and then after work at 5, 6, 7 p.m., come meet me here at the office and feels more comfortable bringing documents and seeing me in person, absolutely also available an option for anyone interested.
Oh, that's pretty good. That's nice. So everybody who's listening, you know now how to contact Leo. And now I want to ask you about the grants because a lot of people are probably asking, okay, how do
Right.
the grants work? What kind of grants are those? And of course we are talking in general terms because as we mentioned before, you
Mm-hmm.
have to go by case by case. And so once you have
Exactly.
all the information from the client or the person that was interested in applying for a home loan, then you have more choices and you'll be able to determine what's better for them in the terms of a loan because you know so many things about the lending process. So, but
Right.
can you just explain us a little bit more about the grant?
Yeah, absolutely. So let's start with the grant one because there are three. We have total of four private programs right now that are kind of in the same sort of category umbrella. I'll start with the grant one. That one is, I think, in my opinion, the most beautiful one because again, it's not a down payment assistance; it's a grant. So this has been, the grants have been usually it's a government supported funding that's provided to certain banks. In the past, I know Bank of America has had some success with similar programs and some other lenders as well. And it's an amount given to the lender to assist and again home buyers to make sure that the rich are not going into even the poorer neighborhoods and purchasing all the available properties and then spiking up the rent. So the plan is for current renters to be able to purchase a property and get through the hurdles of the down payments and the closing costs. So, what is the grant program we have? It's a affordable home program, and it's up to $25,000 provided to the borrower to do the purchasing. Now, the difference between this program and all the other down payment assistance is the other assistance programs they're not a grant, so it's not a gift type of funding that's given to you. It is a assistant that's given to you, and it usually goes as a second lien, oftentimes silent second, which means you are still liable for it. It's just you're not paying payments on it. It just sits in the back on your title. They'll say, your regular mortgage with, let's say, whoever, and then it will be a smaller amount than that grant amount and that down payment assistant amount that will also have a second mortgage there. And once you try to refinance or pay off that property by selling it, you're also liable for covering that amount as well. So that program that needs to be completely paid off. Now the grant. Um, the grant, the benefit is that it's given to you as a 10. You do receive a 1099 for that to 25,000, and it's up to 25,000. So you do receive a 1099 because again, that money is given to you to get the closing costs, down payment, as well as discount points you can use. And once the loan is funded, that amount disappears. It's given to you as a lender credit, so it's not a lien, it's not a silent second. It's once it's funded, it's gone. You do receive a 1099 for it, which speak with your tax advisor to make sure that they're aware as well. You do have to show that as ultimately an income that's made because it's given to you right away with no expectations to be paid back.
Okay.
Um, so, and the grant, and as I was saying, it can be used for closing costs as well as discount points. So, what is a discount point for some of our listeners who may not know is you generally your lender will give you one rate, and they'll say this is let's say the par rate, like let's say 6.125 is the rate, and that rate is given to you at no cost, no additional cost to you, and you generally have option to buy down that rate. So instead of you for the next 30 years paying 6.125, you pay a certain amount upfront and discount points, so 1%, 2% of your loan amount upfront, and that brings your 6.125 down to 5.75, let's say, right? So you're basically buying down your rate so that your monthly payments up front will be, so you're kind of prepaying some of that interest in a lot less amounts to be able to have a lower rate once the loan originates. So the beautiful part about this grant program is that you are able to use it for those as well. So it's a grant that gives you up to 25,000. So it's not everybody that qualifies automatically gets the 25,000. It's we have to go through covering the closing costs first and down payment, and then at the end, if there's still amount available, we can use that to buy down your rate, get some discount points for your rate.
Okay, wow, that's interesting. Well, you know
Yeah,
what? Even though I think people might say, "Oh, but I'm still getting 1099," but hey, 1099 is and 25,000 is like nothing because I'm pretty
nothing.
sure it's free money. They don't have to repay. So
Right,
then if they talk to their tax advisor or their CPA or their tax preparer and they say, if I receive a grant for this amount or whatever, what would be my tax liability? I'm pretty sure it would be minor compared to owning a home, you know.
right.
So
And
I will be if I were one person like that, I will say, hey, it's nice that I can get 25,000 as a grant, even though I have to pay maybe a little tax or some tax on it. But nobody gives you 25,000 for free. So that's the way I
exactly.
see it.
Absolutely. And I'm not the tax advisor. I
Yes,
do recommend each individual to speak with their tax advisor, but
yes,
also keep in mind, especially since you're a first-time home buyer, going from renting, not being able to write off any of that rent as your expense on your tax returns or get any credit for it. Sure, you're getting 25,000 as a 1099 income there, but you also have to keep in mind that now that you're a homeowner, you are able to use the interest paid throughout that year in on your mortgage as a write-off. So sure, you may show more income from one side, but now as a homeowner, you have a lot more items that you're able to get credit for and pay less in taxes ultimately. So it'll definitely balance out and it'll make the 25,000 totally worth it. And it's just a one-time 25. It's not like for the life of the loan each year you're going to get that. It's just a one-time first year, and then you'll be able to benefit from the tax benefits throughout the next however many years you have that property.
wow, that's very nice. Well, just I want to do a disclosure before we continue. And, everything that we're doing here at Blanca Professional Services and also House American Lending is just providing educational tools and resources for the public. We are not giving a
Absolutely.
specific legal advice or tax advice. For that, please consult your CPA or your tax preparer or somebody who is on your financial planning team. So I just want to make that disclaimer because everything
Absolutely.
that we talk here is just as an education tool. So you guys out there learn more about what's out there and that you can also utilize some of that and bring together your team of experts or the people that you trust, your financial planner, anybody who's on your team who can provide you with more answers specific to your individual needs. But you can reach
Absolutely.
out to us if you're trying to buy a home or you're trying to do a loan for a home, all those kind of things. I mean, I do also financial services. I do life insurance and all of that too. But today we're just focusing on the home buying process and first time home buyers and grants available for you and down payment
Right.
assistance programs. So now that we clarify that, can you tell us more about the requirements to qualify for the grants or for the down payment assistance program? And
Yeah.
are these programs can be combined? Can you get a grant and also down payment assistance or no?
No. So the
Okay.
grant is on its own complete different program, and then the down payments are on their own. Um, The grant program is available for all of Southern California. So anything from LA County to Riverside County, San Diego County, all of those regions are covered. Now, the way you qualify, of course, outside of the individual's scenario, as I mentioned earlier, it's also the property itself. So as you know, there's zip code, there's counties, zip codes, and then within each zip code, every so often where the census is collected, they have a track. So then that's they go door to door. They collect how many individuals are living in that household, what the household income may be, and their ethnic and such backgrounds, and they keep those tracks. So once you go to a census tract map, you'll see blue outlines around each neighborhoods. Each zip code may have maybe even 10, 20 different tracks within that zip code. So when doing the grant program, the specific property you're looking to purchase has to kind of qualify as well. So it's you as a home buyer, first-time home buyer, have to have your certain credit. There's a majority of these do have the income restrictions, meaning if you're making too much money, then they may you may not be able to qualify. Uh, but also the property has to itself qualify. So how do you make a property qualified? Well, there's two different ways to make it qualify. That property within that census tract has to either be in a low to moderate income tract neighborhood, or 50% or greater minority neighborhood. So once we enter the address in our tracking system online website, we do check for those things. The first item it gives you is the income. If it says low or moderate, then the property itself qualifies for the grant. If it's middle or upper income level, then that by itself doesn't. Then we'll look at the minority information. If it says 50.1, then we're good. That means that neighborhood is majority minority based on the census tract, and now the property itself qualifies as well. So you can see how this is geared towards helping the neighborhoods that really need the most help. So that way that they can definitely help the first-time home buyers start their first steps there. So we'll look at both the individual's information from credit to income to, of course, making sure that they are a first-time home buyer. And then we'll look into the property. So now that could be different as well, right? You can say, for instance, I'm looking into city of, let's say Silmar, right? And we can kind of take a look, and you may not have an address. You may say, well, Leo, I'm just starting the process. I don't know what the property address is. How do I make sure we qualify for that? We can kind of narrow it down, right? So we can say,
Right.
okay, Silmar is a huge city. Are you looking to be above the 210 freeway, below the 210, or above the 5, below the 5? And then I can kind of tell you, okay, within these regions, these three tracks, if you stay within, let's say, 5 freeway and the 210 freeway, you have from this block to this block, anything you find in those neighborhoods, they are covered. Or sometimes, there may be cities that 90 or majority of the properties there are under at least one or two of those requirements. So
Right.
we can kind of work together, and feel free to say, send a Redfin something you see on Redfin or Zillow, and you can text it to me and say, Leo, does this qualify? And I'll double check real quick. Doesn't take more than a minute or two for me to see the information and relay that information to you. So that way, if you have you want to check out 4 houses, if two of them qualify, two don't, maybe that way you can narrow it down to the two that do, and see if any of those two are what you're looking for.
That's right. So, that's good that you mentioned that. So, can you again repeat your contact information so people want to email you or text you or call you, they can
Yeah.
get a hold of you?
Absolutely. So my cell phone number, so my direct office line is forward to my cell phone. So just my cell phone, or text me any information that you may need. Direct phone number is 818-389-6666. Or you can shoot me an email as well. And that email address is leoj@houseamericahl.com. House America, and then home loans, but just the initials for the second part, hl.com.
Okay, well,
And then
thank you
I'll be,
so
yeah,
much.
you can just put the, yeah, address in there. I'll double check. I'll tell you yes or no as far as the tract information goes.
Well, now that's very interesting. So now, let's say if they don't qualify for the grant, but I mean, you can still help them qualify for the down payment assistance or for any other program maybe that is available that can help them, if there is any.
Exactly.
Okay.
So
So,
there are three other options. Kind of let's so that was the grant. Now we have about three pretty good options for the down payment assistance program. So there these do not give you a 1099 because they are not forgiven the second the loan funds. So uh, the well, I guess one of the older programs that's been around for a while, and that one I would say has the best rate. So the upper hand you get with this one is your monthly interest rate will likely be lowest of all our four options. So that one's the Cal HFA program. It's been around for some time now. We certainly have now a channel that is closing quite a few of these on monthly basis. Their pipeline, majority of their pipeline is Cal HFA, and they're expert at this product. So Cal HFA will let you do 100% financing, which outside of down payment assistance, first time home buyers, you obviously generally need at least 3.5% down, 5% down to be able to finance a home, unless you're in the smaller niche programs like the VA or the USDA, who also allow you to do the 100%. But for your general population that are not previous or current service members, or the house is not in a USDA area, then this Cal HFA will also allow you to do 100% financing. No, so the way it works is the down payment assistance in this program, it does become part of a second lien. It's a silent second, no payments required on the program. However, the second lien is never forgiven, so it doesn't go away after a certain amount of time. Uh, the so let's say if you want to refinance, let's say rates drop, you see property values gone up as a result of rates dropping as well, and you can see now, okay, I can drop my rate to a lower rate, save on monthly basis. You would have to pay off whatever your balance on the main loan is, as well as whatever we had to put as the assistant in a second lien. So both those loans need to be paid off. Then you can do whatever you want. Or if you are selling, keep in mind that amount that has been assisted, the amount, whatever it's, let's say 10,000, and your current loan is 200,000. If you want to sell it, you got to make sure that you at least cover the 210,000 as part of your payoff. So however, you don't have to make payments on it, so it stays there. Um, it's not something you're making a mortgage payment on your first mortgage and then sending another 50 to 100 $200 for your second mortgage. You don't have to make a payment. Um, and there's an ability to do, and that one again, the rate on those generally right now is in the mid to high fives, 5.75. You can probably in the high fives you can get a good rate there, and there's an ability to also finance your closing costs, although that will go in as a third lien, and the rate will then go a little bit higher on the first mortgage. So you do have the option to do the entire down payment as well as the closing costs, although financially it'll probably it'll make more sense to do the closing out of pocket, closing costs out of pocket, so that way you can benefit from the lower rate, because that's truly it's the upper hand it has compared to the rest of the programs is that it has better rates.
right, right. Well, that's I mean, the people have different auctions, so they can choose from the best auction
Right.
and also the one that they qualify for, because everything is also has to be pre-approved, right? Approved by the bank and
Correct.
by the lending industry. So,
Hmm.
but if they're not ready for whatever reason, they can still call you, and then you can still work with them, make them ready for maybe 3 months down the road, 6 months down the road. I mean, the thing is that start the process, and they,
Hmm.
find out if they qualify and find out if they can buy a house. Because the first step,
Right.
and I think you'll agree with that, is that the people have to get qualified and approved. So because the way I see it, when you buy a house, and a real estate agent myself, and I know that the first thing I need my clients to have is a pre-approval letter from the bank. Because the
Of
way I
course.
see it is, just when you have a credit card that you use to go shopping, you know that that credit card, maybe has $500 or whatever amount the credit card company gave you as, to use. But you know that when you go buy, you can pay with that. So it's the same thing for home loans. Once you have the approval letter that the bank is saying, yes, we're gonna give you, let's say $200, $200,000 to buy a house, or 500, or whatever that is, then you can use that, and now you can talk to a realtor or a real estate agent like me, and now we can say, okay, now we can check which of the houses, what areas you have been looking at, and what house qualifies for this, and then we can just help you purchase that home. So it's a
Right.
teamwork, even though people don't see it that way, but it's a teamwork. It's the lender, the realtor, and then we have the escrow company, and then we have title insurance, and we have many
Right.
people
So
on
many hands
board.
involved.
So, and that's something that we need to educate, the people out there, that buying a home, it's a teamwork. Is compromised by different fields. We have the appraiser, right? So we have many things that we need to do. Home inspector, the termite inspector, and so on. So
Right.
everybody has to be on
So many
board.
things.
So
Correct.
what I'm trying to say is that that's the reason you have to be approved, and we have to know that yes, you have the money that the bank is gonna loan to you. Because there is so many steps in the process, and we want to make sure that you qualify, and that you also gonna be able to own your house at the end of all these steps. And at the end of the process, we can give you the key to your house and say, hey, welcome to your
Right.
new home, right? Because that's our main goal, right?
Exactly. Right, exactly. And make it a home as opposed to renting. So the pre-approval is absolutely key factor that you mentioned, right? And there's two different kinds and they're extremely different. You may get a pre-qualification letter from a lender
Right.
or a pre-approval letter. And what are the differences? Pre-qualification is really just you telling a lender, hey, I make 120,000 a year, I have one car payment, and that's the only liabilities I have, and this is the income I have. Would I qualify for this amount? And the lender will say, yeah, based on what you're telling me, you should qualify. So that's a pre-qualification statement, letter, whatever you want to call it. And that has a lot less validity than a pre-approval letter does. What is a pre-approval letter? And a pre-approval, we pull your credit. So we really see oftentimes there might be a credit card that you had when you were 18 and you had $10 balance on it and no idea, never paid it. It's in collection, affecting your credit. We want to see that. So we pull credit, we see all liabilities, including any red flags that need to be addressed. We ask for your income documents. So whether you're a W-2 wage earner, we'll ask for your last 2 years of W-2s and two most recent pay stubs. If you're self-employed or you get paid in a 1099 type of format, we'll ask for your tax returns, and we'll go line by line and see what your true income is and qualify you based on that.
Right.
In today's market, sure, it's changed. It's not 2021 or 2020 where you had around the block line of borrowers. And back then, of course, if you didn't have a approval, there were some open houses that would require you to show the pre-approval letter before you actually went to tour the house, because they would get so many inquiries that they didn't even want to waste their time with someone who hasn't done the biggest step, the first step of the process.
Right.
Of course, the market shift. It's a lot more of a buyer's market today than a seller's market, but the importance and validity of a pre-approval has not changed at all. And today, even if you fall in love with that house, you can't put an offer in without having the pre-approval, because the seller is going to look at you that claim you have the ability to purchase this property versus borrower B, potential client buyer B, who already has talked to a lender and has that pre-approval. So the seller is going to feel a lot more confident in making sure that this deal does close within 30 days because they already know this person qualifies for the amount that they're asking for. So that's definitely the first step. And again, reach out to me, even if you're thinking of buying next year, reach out to me so that we can talk some numbers. Hey, Leo, I want to buy next year. I'm nowhere near, I'm doing this, I'm doing that. What do I need to do, right? For instance, we can look at how much closing costs are generally, right? I can tell you, okay, you want to save, ideally, you want to save this much in your account and be able to have that when we want to start the process. Or, for instance, my car, what kind of car, what's your car payment? Is that a lease or a purchase, right? Uh, for instance, if you're purchasing a car, something not to make it, so that monthly payment is part of your debt to income ratio. So if you have a huge car payment, it's going to affect your ability to buy, because now you have to pay the car payment as well as the property payments, right?
Right.
Now, in a lease scenario, we don't have that option. But if you're purchasing your car and you have less than 10 payments left, for instance, we can exclude that because the lender is looking at a 30-year financial aspect of yours and understands that if this car payment is done in a few months, we can exclude it from your debt. So those are the things we can have a conversation with, right? I can say, okay, how much do you have on your car payments? I have 12 months left. Well, you know what? After 2 months, we can even start the process and not have to worry about that car payment being part of being an obstacle in your qualification process, right? So there's definitely, again, that's just one example to use, but there's a lot of things that you can benefit from by just having a quick conversation. Again, if it's
Exactly.
2 months from now you want to buy, or even the next year, you can tell me, hey, we're only in January, but I won't be able to purchase until 2024. Let's have a talk. Let's talk. Let's see what you need to do in the next 12 months to just improve your chances, right? The better certain things are, the better interest rate you'll get and the better options you'll have and the ultimately lower monthly payment you'll have as a result of a lower rate. So let's chat and let's see what we can do for you.
Okay, that's awesome. Well, with this, we're gonna close our podcast because you know, I think you guys have a lot of information now. Now you know how to reach Leo, and you know that it's about making the conversation, reaching out to people, and getting the information. Even if you're not ready right now, just call and find out. You know what's out there for you, and then how long it's gonna
Absolutely.
take for you to reach that goal. If your goal is to become a homeowner and you say, oh, but I have so many issues, or maybe you don't have any issues, but let's
Right.
talk,
You may
right?
think something
Let's
is a
have the
lot worse than it
conversation and
really
then
is.
see where are you, and
Absolutely.
then we can help you. And if, like Leo mentioned, if you have credit problems, we have resources to help you with that too. So, and
Hmm.
if you need,
Absolutely.
us to put together a financial plan where you can list all your things that you have to pay, then all your liabilities, then no problem, we can do that, and that will give us more of a map, of how long it's going to take for you to go from point A to point B. So this is why we're
Exactly.
bringing these resources to you in this podcast, and we appreciate Leo for coming today and helping us and
Absolutely. It's
providing
my pleasure.
all those informations, that are not available sometimes, and we want to bring the community more learning experiences like this, and I hope this is not only the first time, but we can continue on bringing more podcasts with more
Yeah, absolutely. I'd love to
information.
do these more often. Definitely.
Well, thank you so much, and thank you everybody. And if you wanna call me, you can call me at 1-800-637-5833, or you can go online and check our website www.blancaprofessionalservice.com. And then I gonna ask Leo again to repeat your cell phone number just one more time.
Yeah, absolutely. It's area code 818-389-6666.
Okay, and with that, have a wonderful day, everybody, and we'll see you next time. And thank you, Leo, for coming into this conversation.
My pleasure.
Okay.
Goodbye, everybody.